we got a question about the 46% discount to NAV on the Grayscale Bitcoin Trust, symbol GBTC, on the OTCQX, trading at 1188 and a market cap of 8.2 billion. The trust was founded in 2013 as a private fund, and it began to be publicly quoted in 2015. GBTC is a trust that holds Bitcoin as its underlying, with the goal of giving investors exposure to Bitcoin, less the fees and expenses, of course. But as the current discount implies, it's failed at this goal. It even says in its perspective and all over its website, it's failed. They know they failed at this. So what do I mean by trading discount to NAV, or NAV? I'll be calling it NAV. NAV stands for net asset value, which is the cumulative value of the underlying asset, or the assets in this case, which is Bitcoin. On a per share basis, the trust holds 0.00091 Bitcoin, or roughly $22.27, but it only trades at $11.88, and there's your 46% discount. So it's just the market value divided by the and NAV value minus 1, of course, so that's 46% or negative 46%. As of the market close on the February 21st, of course, it does fluctuate a lot because it is Bitcoin. Previously, GBTC has traded at a significant premium, so this is when the market value is above the NAV, and it only started to trade as a discount in early 2021 and has steadily increased this discount quite consistently over the past year and a half. As this is structured as a trust, there is no guarantee of redemption for holders of the shares, and this makes it so that you can't close the spread quite easily. As of right now, the price and therefore discount of GBTC is purely based off the supply and demand of the product. And as other products now exist for Bitcoin exposure compared to 2013 when it was initially created, demand for the structured product like this has dramatically fallen. It makes sense when there's other products, the demand's going to just naturally fall. This is the same reason why I previously traded for a significant premium, because simply there was no really other products in the market as it is directed at institutional investors who are trying to gain exposure to Bitcoin. They weren't familiar with the product or the product class. And of course, there's no other products in the market. So they were willing to pay a premium to the actual market value of Bitcoin. So there's your premium valuation. This is different compared to an ETF, which GBTC has the goal of converting to. An ETF allows for authorized participants like banks or market makers to purchase the ETF share on the open market and redeem it with the issuer for the underlying asset or the asset value. Depends on the exact structure of it. This is important because it allows the authorized participants to conduct an arbitrage trade if a significant discount occurs, like in this current case with GBTC. There's, of course, fees to consider with ETF. So normally ETFs will trade within less than 1% of the actual NAV value, but sometimes it can be significantly less than that. So if you look at like heavily traded ETFs like the SPY in the US, it's very commonly like 0.1% or less, because otherwise you'll have arbitrage traders instantly come in, and it's just all automated, and in a fraction of a second they will have created a new share and sold it off, and effectively they're making free money whenever that happens, which is why you'll commonly see this with ETFs. The sponsor of GBTC has tried to convert to an ETF in 2022. The sponsor is Grayscale, which is a sponsor is more or less just an organization that promotes and brings in capital to the trust and is responsible for the creation and redemption of the shares. In this case, they are also the initial creator of the trust, but that's not always the case. Sponsors can move around. They can get sold the underlying operations, because they do get fees in exchange for running the trust structure. And in this case, it's actually quite significant. It's a 2% fee of the NAV. So that you're not paying 2% of the market, you're paying 2% of the NAV. And over time, you can see, I'll put up a graph, their Bitcoin's holding have slowly decreased at that 2021 point. And this is due to them taking their fees over and over again. The switch to an ETF structure was blocked by the SEC because they believe there's no safeguards to protect against market manipulation. Grayscale has, expecting this to happen, and this was in June of 22, initiated a litigation against the SEC following the decision on the same day. The SEC has previously approved Bitcoin futures products, but not Bitcoin spot products. So this is a derivative, and it is traded on the CME, the Chicago Mercantile Exchange. And what Grayscale's perspective is, it's the same risks. They should be treated as the same product. The SEC cannot choose and select the products if it's the same ultimate product. In this case, what Grayscale's argument is still Bitcoin, either if it's a derivative of Bitcoin, so a future, or if it's the spot, which is physical in this sense, even though it is a digital currency, of course. And they're arguing it's the same thing. However, the SEC argues it is quite different because it is ran through the Chicago Mercantile Exchange and it's more regulated. It has a historic, I think it's 100 years or something like that behind it at this point. So it's quite regulated. I'd actually argue in this case in favor of Grayscale because the CME, they actually use the benchmark. So this is how the futures are traded off of, is derived from the same source, which Grayscale derives their pricing mechanism off of, which is external exchanges. So ultimately, you're seeing the prices, which could be subject to manipulation, derived from the same source. So I don't really see the SEC's argument there. I would actually agree with Grayscale, which normally I'm quite critical of the cryptocurrency companies, but I'm not the SEC, and you have to await their initial decision, which they're expected to have oral arguments on March 7th, but then it can take about a month. And if Grayscale fails, they already said they're going to appeal it. So it could go on for quite a while longer. But if Grayscale is successful in the lawsuit, you'd likely see an immediate snap in the price up to that NAV value, so nearly a 100% increase for investors overnight, because they know arbitrage is going to happen. And when arbitrage happens, it will go to that 1% or so within the value. But this would actually mean most likely a lower price in Bitcoin because they have a significant backing of Bitcoin, about 600,000. There's about 20 million Bitcoin outstanding at this time. So what you're looking at a few percent. And if they arbitrage, let's say they completely arbitraged it out, 600,000 Bitcoin right onto the market, obviously would decrease the price. This would happen until an equilibrium price were to be reached. They would most likely be offloading in block shares when it wouldn't impact it significant. I'm not talking like a 50% decrease. We've seen Tesla, they offloaded about 100,000 Bitcoin or so, and it did make an impact on the price, but it was along with a ton of other stuff. So I'm not saying it's going to collapse the price if this were to happen, but it would most likely have at least short-term impact. But if Grayscale were unsuccessful, and most likely after their appeals and after all that, if they were still unsuccessful, they may do a tender offer for up to 20% outstanding shares, which more or less they go into the market and say, hey, we're going to pay X percent per share, so they might pay $22 right now, and people are willing to sell the market. Obviously, if you can buy for 12 and sell for 22, you're immediately going to do that. So it takes some shares off the market. They've previously actually had redemptions available way back in 2014, but the SEC deemed it violating financial regulations. And in 2016, they did a cease and desist. So more or less, there might be more legal troubles if they had an ongoing redemption program, but they are available to do a tender offer. But there are, of course, it's a complex legal situation, so we could see where that goes from there. As there are no redemptions possible, we've just been selling in the open market as the crypto market has effectively collapsed in 2022. You've seen multiple large bankruptcies, some of whom who actually held GBTC. I think Three Arrows Capital, which was a hedge fund, collapsed last May or so. They were actually doing a trade with GBTC where they would buy it and then they'd short Bitcoin. I can't remember if they were just long. There's a trade which has been talked about quite a bit. You'd buy GBTC, short Bitcoin, and hope the spread closes. But as the spread has grown and lots of these players are doing margin, it can collapse their funds quite easily. I don't remember the exact function they were doing it, but they were holding GPT in some form. And as they need to sell off the GBTC to meet their liquidations, it makes the spread bigger and bigger. So that leads us to the 46%. Recently, we've seen the parent company to Grayscale, which holds obviously some of these funds, Digital Currency Group, or DCGG, facing financial troubles after one of its subsidiaries, Genesis, is now facing bankruptcy. So they've been selling off some of their assets, which includes their own product ultimately. And this ultimately wouldn't affect the trust. It is held in a trust, so the underlying Bitcoin is secured. It's held actually with Coinbase. They only promote it and then they create the shares. So if, let's say, DCG were to go completely bankrupt, you still have the trust. The sponsor most likely change. That asset would be sold off. But I have seen it online where people are like, oh, the thing will collapse and they'll lose their coins. Assuming they're following what they're saying they're doing, which you never know with this space if they could be completely fabricated, but it's with Coinbase, with another publicly regulated entity. That risk, I would say, is fairly low compared to many of the other players. But it's not the core reason why, which many people have been bringing that as the reason for discount, which is why I'm bringing it up. But in summary, GBTC has a discount due to only having really one way out, which is the open market. You have to sell, you can't redeem like many other structures like ETFs. And as the market demand has been lower and lower over the past year and a half, as well as just the product not being unique anymore, it's just increased the discount over and over. So there is obviously a trading opportunity. We're not traders. I'm not saying to go run out and do this trade, but it is obviously something which has been talked about, but it's actually hit hedge funds hard. Just to give you an idea, this trade has already failed in the past. So I'll open it up to you guys if you guys have any comments.
So you're saying that hedge funds have tried to make this trade and it just keeps getting more and more of a discount.
Exactly.
Right? Yeah.
So early 2021, the discount was zero, like it was equal to the NAV, and it's since fallen over the past year, this discount more and more. So if let's say you were like a 10x leverage, if there's that spread increases by 10%, which it's went up 46% or down 46%, depending on how you're looking at it, that would obviously need liquidation or you need to add more funds in. And this is what was happening to some of these companies. I've seen this trade happen multiple times. And remember, if you're holding, in this case, you'll be long this Grayscale fund, or Grayscale Trust, I should say, you're paying that 2% fee as well. Mm-hmm. So your funds will actually go down. You do have a bit of decay in there.
Yeah, that's a good point.
Yeah. So if you're owning, you're hoping it becomes an ETF one.
Exactly.
Obviously hoping the price of Bitcoin goes higher.
Yeah, it depends how you were to structure it. Yeah, if you're doing like the short Bitcoin, long that, it doesn't matter what Bitcoin is. It just matters on the spread. Mm-hmm. Yeah.
Interesting. Okay, well, I think that will end us off.